So, guys, if we group the blockchain investing market into 3 categories, as we talked about before, it might be Bitcoin altcoins, and then utility tokens, and then tokenized assets. And this panel, we're going to talk about tokenized assets. And this is one of the big promises of blockchain, is we're going to be able to tokenize everything from real estate to fine arts to VC funds, everything. What use case of tokenization gets you guys personally excited? What are you looking forward to?
Well, obviously, the whole tokenization of venture capital is something that's very close to our heart at COSIMO. We've just launched a new security token fund that we've been working on, actually, with Jamie Finn from Securitize, who can't be here today. But it's an exciting new way of looking at venture capital. And it's doing 2 things primarily. One, it's democratizing access to this asset class, in that the entry level for non-US investors is only $10,000, which is unheard of, as you know, in venture capital. Yeah. And the second thing, for accredited investors here in the US, it's only $250,000. Most of the venture funds or the private equity funds here in the US, and in fact globally, you can't get in for any less than 1 million, maybe to 5 million of a capital commitment. So that's the first big thing, I think. But the most important thing, and you know, Rob and I were out in the marketplace trying to raise money for a traditional fund for about 9 months, and we found one of the biggest pieces of feedback we got was lack of liquidity. And what the whole tokenization, what blockchain brings to venture capital, what really disrupts it, is this whole liquidity that it brings to the marketplace. I know Chris will, and Annemarie will probably talk a bit more about this, but the ability to be able to trade after 12 months, if you're a US accredited investor, to trade that token on a market, an open market, is truly groundbreaking.
I have so many questions about this. So I can come in as an ordinary investor and buy into your VC fund at $10,000 minimum, and I will have essentially a token that represents a share of ownership in your VC fund.
That is absolutely correct. If you're non-US. If you're US, you need to invest $250,000 and be accredited.
Okay, and then these tokens can be traded out on markets.
Yes.
Like where? What market?
There are security token exchanges that are coming on stream. I'm sure, again, Chris will talk about his own platform. There's others like Open Finance and T0 that are coming on stream, and many others around the world. So it's a growing,
then you guys are investing all of this capital in your investments, and how do I know what you're up to? Like, what are your rules of engagement?
Again, it's very transparent. Our PPM, our white paper, our deck is all available on our website. You can go there, you can download it, analyze it. We're not really, we're not changing what we're doing as investors. What we're doing is we're changing the way that we do it. And that tokenization, like I said, that brings the liquidity, brings the democratization to good fundamentals of investment in great businesses. So we're investing in deep technology companies, and we've got a heavy emphasis on blockchain. Gecko Governance, one of our companies, a compliance and regulation platform built on blockchain, and Onero, which you'll hear more about later. But
and you've got a lot more investors now too, so it's almost like you're more like a publicly traded company, where now you have to have more investor relations. You got less sophisticated people coming in, probably. They're going to demand a higher return. Maybe they're not as patient. It's going to be a lot of back and forth. It's kind of fundamentally changing what VCs do, right?
Absolutely. But again, the blockchain allows us to be able to take in 2,000 to 3,000 investors instead of 10 or 15, as would be traditional. Yeah.
Very interesting. Okay, so I've spent a lot of time doing this book, Blockchain for Everyone, going to be out next year, and researching the early stock market. And I'm really fascinated by that. Because how weird it must have been for early investors to think about, like, you're getting this piece of paper that represents a share in a company, and why does the piece of paper have any value? It's still kind of weird when you think about it. Do you think these new token markets are like the early stock market? I'm curious in your perspective on this. Is this kind of like the early days of the stock market all over again?
I'm not sure I quite follow the question.
Well, so you had a lot of speculators. You had a lot of kind of Wild West behavior. You had people trying to get their heads around a new model. And now you have these new token markets that are out there with these tokenized assets.
So really, I don't think there's anything new to get your head around on it. So what we're doing is digital assets as securities. So the underlying instrument is everything that everyone is used to historically. It could be a hundreds of million triple net lease product that a Blackstone or Fortress would typically take down. The difference now is not the sell of the blockchain necessarily, or the underlying merits of the investment itself. They would typically do it. It's the ability for secondary liquidity. So if you look at the ability to have downside protection through secondary liquidity, you kind of take that all day long. It's really nothing new, especially because it is asset-backed. When you start looking at the cryptocurrencies in that world, the wild, wild west, it's more speculative and based off of network effects. I think those are apples and oranges.
Okay, I don't understand. So how are you leveraging blockchain technology?
Yep, so the blockchain technology is automating everything from the transfer restrictions, the ROFRs, accreditation checks, suitability requirements. So typically when trying to transact in the secondary market on a private company, it can take a month, month and a half. You have to involve all the lawyers back and forth. All of that's automated on the blockchain, checked instantaneously, digitally, and you have full depths bids, full depths of bids, offers, depths of markets, and full transparency. In addition, with our S&P QSIP, that allows unique identifiers to be attached to all of the offerings on the platform. So every Thomson Reuters terminal, Bloomberg terminal can see the offerings on the Templum product. This allows for greater transparency, better price discovery, and also the deterioration of the illiquidity discounts.
All right, let me try to translate all this. So this is a marketplace for tokenized assets, right? And you are using blockchain technology to store all of the ownership of these tokenized assets on a distributed ledger, as Mark talked about before.
Yep.
Is that right? But
yes.
You're saying the underlying assets are traditional assets. You don't have anything radical that people are actually trading. It's just a different way of creating a secondary market using blockchain technology. So did I get it right?
Yeah. So for example, we did the world's first tokenization of a trophy real estate asset. That was the Aspen St. Regis.
So this is a pretty interesting story here. This is the actual hotel that these guys, Templum, just put on the blockchain. And this is an actual 5-star hotel in Aspen that you can own a piece of. So go ahead and tell us about the hotel here.
Yeah, so internationally known property, Aspen St. Regis. So one of the current equity holders came to us and wanted to tokenize a portion of his equity. So we went out, found buyers for the equity he wanted to tokenize. He found international distribution for that. In addition, he decided to keep some of his equity and tokenize that too to be able to trade at a later date. It's a private REIT. Investors will get a distribution just like you would typically if it was done on paper. Again, the underlying asset, the mechanics, absolutely nothing different. You just now have the automation of the blockchain.
So it's like a REIT, a real estate investment trust. Everybody can buy a little share of this hotel, but it's all stored on the blockchain using your technology or your marketplace.
Yep, and it's on the blockchain, the S&P QSIP. Also, we use a transfer agent too. So if any of the records are lost or stolen, they're able to reissue them. So a big problem for institutional investors is these effectively right now, the blockchain is a bearer instrument. So we have the ability to go back, reverse a trade, having the S&P QSIP, the transfer agent, and the blockchain. And that's really what's getting the institutional adoption.
Mm-hmm. So you put this out there. How many people, just tell us what happened. So you got this hotel out there. How many people came in, started investing in it? What is it like now?
So can't disclose the actual numbers, but open the deal, close the deal in a matter of, 3 weeks? Mm-hmm. Yeah.
Okay, and is it available now for investment?
It's already closed. So in about 12 months' time, it'll become publicly available to trade.
In 12 months, any of us will be able to come in. Is there a minimum? Do you have to be U.S., accredited investor? How does it work?
You have to be, well, at that point, you don't have to be an accredited investor. There's suitability requirements based off your investment profile. No minimum, or there might be a minimum of secondary trading. We have to figure out what that ends up being. Really, the only restriction is 12G, which is the number of record holders you can have on a Reg D document. So you can only have 2,000 record holders. So that's one of the things.
So there's a cap of 2,000 investors.
Exactly.
Yeah. Okay, that's fine. And so why the owners of the St. Regis Hotel, why did they do this? Why wouldn't they go in a traditional REIT or some other recapitalization model?
Because they have a portfolio behind it, and this is a test case that they want to go and issue security tokens.
So they're testing the waters, seeing how this all works out.
Exactly.
Yeah. I love that because there's so much theory in this space, and I love hearing real use cases such as yours as well, Ciaran, with the VC firm. So, Annemarie, you have worked a lot on changes or reforms to securities law, especially around laws that encourage capital formation. What's one meaningful opportunity for us here to improve on existing securities law? Because we have this kind of window of opportunity open right now with blockchain, right? There's the opportunity to do things differently. How would you like to see it done differently?
Well, one of the things that I don't think was mentioned in my background is my first job was at the Securities Exchange Commission. So I'm a big proponent of regulation. I'm a big proponent of structure and investor protection. And I think one of the things that sets Templum apart from the competitors and why I don't think we're like the early stock market. I also worked at the New York Stock Exchange at one point, so I know about one true story very well. We are highly regulated. We are a registered broker-dealer. We are a registered alternative trading system. We are approved. We're the only dual primary, secondary participant in the market that we know of that's specifically approved to trade in digital assets. So when we are doing a deal, we're doing it, like Chris said, as a typical broker-dealer, going out, identifying issuers who are interested in trying this new technology for basically booking the transactions. And then we put people through KYC, AML, verify accreditation, take the money into an escrow account, and close the transaction. So it looks like any other intermediary broker-dealer on the street. We are just doing the digital security. We're selling securities in a digital format. What I see as necessary in this space from a regulatory point of view, maybe twofold. One is the SEC is definitely sitting on innovation in this space very significantly. There are at least a couple of ETF-type structures that want to trade cryptocurrency that the SEC will not allow to proceed. They're very worried about manipulation, but they're not an anti-manipulation agency, they're a disclosure agency. So I know at least Commissioner Peirce came out and said that if it was up to her, she would have allowed those ETFs to proceed, and that she would have let the market figure out what the anti-manipulation protections should be. So I'd like to see the SEC actually allow this market to develop and to allow investors to make these decisions on their own. That I think is really important.
So I've heard that the manipulation concerns have been the main reason we don't have a Bitcoin ETF right
Correct.
now.
Yep.
And in what way is the SEC concerned? Do you have any specifics on that?
Yeah, another previous role I had was the general counsel of what's now Digital Currency Group. It used to be Second Market. We were an early mover in Bitcoin trading. We created the first private trust for cryptocurrency investment called the Bitcoin Investment Trust.
Second Market's a big deal in this space, yeah.
Yeah. Again, now it's Digital Currency Group.
Yeah,
so
yeah.
We saw what the Winklevoss brothers did going to the SEC with their S1 in 2013.
Yeah, the Winklevoss twins have been trying to get this going for a long time.
So we decided to go another route, and we did a private trust vehicle where only accredited investors could participate and raised a lot of money in a very sensible fashion. I think that, manipulation around cryptocurrency is because it's a very volatile commodity, whatever you want to call it. There have been multiple attempts, I'd say, at trying to create some kind of regulation or watchdog around what that is. But I think John put it really well in his presentation earlier. The market is, I think, still nascent, but it's regulating itself. And the fact that there's been, however, millions and billions of dollars of transactions in crypto with no fraud, I think is really significant. So, from a manipulation point of view, does the price of Bitcoin go up and down? Yes. Does the price of gold go up and down? Yes. Does the value of a dollar go up and down? Yes. But, there's no central regulator because it's a decentralized market.
There's certainly hype cycles. You can see that, but that is true in any financial market,
correct.
Right?
Yeah. So, I think that there'll be a solution. Somebody will come out, maybe it'll be a more seasoned player that the regulators are comfortable with, who creates some kind of a, process that the SEC gets comfortable with to allow these ETF structures to go forward. They're also sitting on a range of Reg A Plus transactions, which are smaller dollar amount transactions that are available to retail investors, kind of the outcome of the ICO bust when they said they've never seen a token that wasn't a security, which we firmly believe is the truth. And I've always been a proponent that these transactions are securities transactions and should be regulated as such. That is why our business developed regulation first, business launch second. So we think that that's really important. But the SEC has to tell us what the rules are, right? They have to say, here's how we solve the
Well, do
concerns
they?
we have.
Do they?
Well, I think so.
Why
because-
don't we tell the SEC, here's what we think the rules should be, now respond to that. Now respond.
Yeah.
Like, why don't we go out and put the model forth, and then at least we have a starting point for discussion.
Well, I think that's what happened with ICOs, where the market went out and said, these are utility tokens, they're not securities, and now they're all enjoying enforcement visits, which are not pleasant. So I think that you could try to do it on your own. The market, we all are firm believers of decentralized blockchain solutions, but we're building a model that's putting traditional market structure elements around what should be a decentralized model because the regulators are not comfortable with decentralized models. So Chris referred to a couple of things that are probably worth touching a little bit deeper. One, we've built a registered transfer agent functionality into our process, which makes no sense, right? The blockchain is a decentralized, basically, registry transfer agent, but they're not comfortable with that. So we've built that in to give them comfort and to give investors comfort because not everybody's willing to just jump in off the dock and go right into the deep water.
But that's a good example of where you proactively
Correct.
put forth what seems to be a best practice.
Correct.
And that, to me, is the grown-up way of approaching this and what we all need to be doing more of. How many of you have read this piece by David Hoffman, the professor of law at University of Penn Law School, called Regulating Initial Coin Offerings? Has anybody read this piece? So you're in for a treat. We brought a 2-page summary of this document, which is really fantastic, I mean it, in that they went and looked at 50 ICOs and they said, what are some of the things that people are promising in these ICOs and how can we create more best practices around them? So we summarized, one of our analysts summarized this for you. We'll give this out to you guys. But those best practices, it seems to me, is what we're trying to get to at this point across the board. You agree, Ciaran?
Yeah, one of the fundamental difficulties, though, is that we're basing what is a security and what is a utility and what is a currency on case law from 1946.
It's outdated.
It's outdated completely. The other thing coming, growing up in Ireland and not being used to until I moved here, the term accredited investor, I understood to be savvy investor. But I've learned from my time here, those two things are not equal. and I think, I know you might laugh, but it's actually, it's a serious point. And I think that blockchain, you asked, what can it bring to the ecosystem? I think we need to look at both of those things fundamentally and see how, by working with regulators, can we move those into this century? And I think that would be a fundamental positive step forward.
Laws can be changed.
Yeah, so just to clarify, we completely want to get to that endpoint. We want this market to flourish in the near term, so we put the transfer agent, clearing, S&P CUSIP alongside with the blockchain. Over time, as we start amending the regulations, we can start pulling those pieces out. But unless you have those mechanisms in place, you're not going to get to this. You're not going to be able to just basically shock the system with blockchain only. You have to slowly remove it as they get comfortable.
So Chris, I want to know what kind of other projects are you guys seeing at Templum? Like what other types of tokenized assets do you predict that we'll see in the future? What are the big categories that we're going to be seeing in the next year or two?
Yeah, so we've already secondarily traded a fund. We've done a Series A company. We just did real estate to Aspen State Regis. We have a significant loan pools coming on. Artwork is in the pipeline, patent portfolios, more real estate. So it's really just every asset class you can kind of imagine coming online. They want secondary liquidity.
But what are the biggest ones?
Real
estate's probably the
Real
biggest
estate.
one.
I hear a lot about real estate too.
I'm looking forward to when John Henry puts the Red Sox. Puts 15% of the Red Sox up for.
People are talking about that. The sports teams will become tokenized, and the fans will be able to own a share, which I think is a terrific idea.
It would be a terrific idea.
Yeah.
Like I think that would engender a lot of. I mean, why shouldn't we be able to own a piece of our towns and our cities and this building right here?
Well, look at the Packers, and most of the sports teams actually were publicly traded prior to 20 years ago.
Yeah.
To 30 years ago.
Yeah, the democratization and decentralization of all of this. Annemarie, did you have something else to add to that?
No, I was just going to say, what was, I think it was a bit surprising to us, the St. Regis came to us on an inbound. And when we realized the opportunity around real estate, our plan is to hire industry experts. As I said, we're a primary placement broker-dealer, so we're doing diligence, we're doing suitability, we're making sure that we're only dealing with issuers that are really backed by assets, Chris said trophy type properties. I think if you get into the high level, real value assets, and that's where your business model basically lies, other high profile, high value assets will follow. And I think real estate's a really good place to start in a very significant way. There's a lot of reasons that real estate makes sense from a tokenization point of view, and having the ability, and I know everybody hates regulation if you're not a lawyer. I love regulation, as I said, but right now the SEC's rules say that you have to hold a security that's sold in a private placement for 12 months in order to have a free trading market for it after, for any retail investor to purchase. In the meantime, after 90 days, you could build a market around accredited investors. So I think for some issuers, we'll have an accredited investor secondary market, and for other issuers, it'll be fully tradable. It'll look like a bulletin board. We've got bids and asks. We have, as Chris said, we have a relationship with SP CUSIP, which is extremely unique. So every token that's issued through our platform will have a CUSIP identifier. We're the only one out there that has that relationship, so that if you are interested in buying a security, and you're a broker or you're a money management person, you could find that security through through a Thomson Reuters terminal, like Bloomberg terminal. Like Chris said.
Ciaran, I
we're
want to
building
ask
a whole ecosystem around this.
I want to ask quickly. Stable coins are all the rage nowadays. Another very hot topic right now in the blockchain space. Stable coin is basically a coin or a token that has its value pegged to some underlying asset, usually the U.S. dollar, but something that will help it hold its value, so you can avoid all of the crazy price volatility of Bitcoin and other altcoins. So you guys launched NDAO recently, which is, you call it a buoyant coin. It's kind of a stable coin, but it also has the opportunity to appreciate. The best of both worlds.
Yeah, I would say it has elements of stability, but it's not a stable coin.
Okay.
Because if you break down stable coins, 75% of them, like you said, are backed by gold or the dollar. And everything that Mark just presented to us, it doesn't change the value of what he talked about.
Yeah.
It just changes, the efficiency.
Yeah.
And it's great for a trader overnight if they want to sweep to a stable coin backed by fiat or gold and get back into trading the next day. So that's the value. As
you close out all your positions at the end of the day, you know that you're not going to lose 50% of value overnight.
Overnight. But to us, that's the only value. They're not a good long-term store of value. And NDAO, the reason we invested $3 million in NDAO is because we believe it is the best long-term store of value we've seen out there.
So you are fascinating because you guys have actually launched this thing or are working on getting this going. And so you have real-world experience. You've been out there on the battlefield getting this thing out there. Can you just tell us quickly, what is the process for creating one of these new tokenized assets, one of these new coins, and then getting it out there, getting investors in and so forth from a high level?
Yeah, you need genius minds, brilliant people, brilliant programmers. These things are not easy. If they were, everybody would be doing it. And I've never seen anything as complex as this particular area. But the people behind NDAO are some of the most brilliant minds in economics and banking and computer science. I could go on in trading, et cetera, that have come together and have been working on this for nearly 5 years now. We got involved a year and a half ago, put the money behind it and allowed then a tech team to come in and build their dream, build the vision. But we're a very operational company. So I was out in Hong Kong the week before last, presenting this to over 80 different companies. And I have to say the reaction out there and the understanding out there was phenomenal. They get that it's not Bitcoin, and they get that it's not a stable coin, that it's something in between,
new.
that it's got stability.
And these investors are so open to new models, which is great. They're very mentally pliable. We all are sort of lifelong learners, I call it, those of us in this space.
Yeah, absolutely.
Which is interesting. So to leave everybody here with some takeaways on what these teams look like or who they need to attract and hire and start to build within their own worlds. You mentioned good economists. You mentioned good technologists or blockchain developers. Yeah. Other folks that you guys would add to that? Obviously, good legal or counsel that understands the blockchain space.
Just one short point on that. I think one of the great things about NDAO is it started with the economists and the traders, and then they applied blockchain to that platform. Not like many ideas and projects and decks that we get in the door every day. They start with great technology, and then they try and back into good economics. I think that's a fundamental difference.
Yeah, start with the economics.
Yeah, I think for us specifically, it's institutional sales, distribution, origination. All the products that we're going through our platform, these are institutional grade products that are going through the large banks, large private equity firms, et cetera. So that's where,
So great sales and distribution team.
But on the institutional level, yeah. So you have the other ICOs or tokenized assets that are going off, and that's a little more retail focused where we are, and we've developed it with our relationship with S&P, and if you have the transfer agent, et cetera.
Sure.
This is more of an institutional product.
Yeah, so the sales team, any other thoughts on that, Annemarie?
I think that, going back to something again that John said earlier, is you have to be interested in disrupting a traditional ecosystem in a way that's comfortably disruptive, if that makes any sense. So I think you have to be interested in the space. We meet a lot of people who have come to blockchain, at this point in the cycle, which I think is absolutely fascinating. So I think you find the people who have the traditional skill sets but are interested in the next iteration of how things are done. That's been really exciting to us to see people coming saying, we'd love to get involved with your company. I've been head of capital markets someplace for 20 years, but what you're doing is really exciting, and I'd love to be involved in that. So that's I love that evolution of kind of traditional market players.
Yeah, I'll just close with saying that in our talking with thousands of blockchain investors, they come in all shapes and sizes. They're male, female, they're students, they're retired hedge fund managers, they're stay-at-home moms. But what we've noticed is three things that they all have in common. The first is they're early adopters. The second is they're tech savvy. And the third is they're intellectually curious. And that's what you're getting to, is you have to be intellectually curious in order to really thrive in this space. And that's what I encourage you to be today. That's why you're here today. Thank you so much to our panel up here, Annemarie, Chris,